The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and I want to help you with your taxes. I'm Esther Gulius, the Tax Lady from EG Tax, and I'm joined in studio with Tiffany Fabian. Hey, Tiff.
Hey there. Happy Saturday.
Happy Saturday to you. Boy, I'll tell you, I got this pet peeve going, and it just infuriates me how much marriage penalty is being
with the tax
foisted
reform
on a married couple. If they were two singles, they'd make out so much better, and I'm just upset about it. Give an example, because of the cap on taxes, which is the big thing in New York State,
SALT.
right? The SALT. It's limited to $10,000. So a married couple living together, lovely couple, working their butts off, are limited to $10,000. But if they were two people cohabitating, right? Mm-hmm. They would, their SALT deduction would be 20,
right.
10 and 10. So if they're in the 22% bracket, the married couple pays an additional $2,200 in taxes, and it just drives me crazy.
I just said to a couple last night, they came to see me from the Grand Island office, and I said, yeah, well, you're married. Then so the house that you have and the property taxes that you pay used to be able to itemize, and if you were single, you could right now, and
you might be able to itemize a little bit on the state,
right?
But on the federal, bend over,
right.
It just
breaks my heart because I just like things that are fair.
Okay, they want to do this cap thing. Okay, right. They want to do the cap thing, but don't make it so two people living together without the benefit of marriage are going to pay thousands of dollars less. Right. That just drives me crazy. Yeah. Anyway, I'm Esther Gulius, the Tax Lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 3930. And today our subject is credits. We want to make sure that you understand what a credit is, how to get a credit, and of course, any of your questions we'd love to help you with. Again, 8030930, 8030930, star 930 on a cell phone. And we got Joe from Ohio. Hey, Joe. What can we do for you?
Hi. You might remember I called you last week about capital gains on a house sale.
Yes.
I'm going through the Schedule D.
Uh-huh.
Okay, I own the house more than 1 year, but less than 2 years.
Right.
So I'm assuming that would be considered a long-term gain?
You held it for more than a year, right?
Yes, more than a year.
Then it's long-term gain.
Okay, so I filled out the Schedule D, and when I get to line 20, it says 18, 19 are zeros. Then to fill out the worksheet for
That's
line
right.
12A.
Right.
I fill it out, and it shows I owe zero tax.
That's wonderful, isn't it?
Because my income is
low enough, right? And that's one of the benefits, Joe, is if you're under the 15% tax bracket, then your capital gains are completely tax-free on the federal. Now, some of your other income might be more taxable, like if you had Social Security, but that sale is going to be tax-free on your federal return. However, on your Ohio return, you might have to pay taxes on it.
Yeah, that I'll have to.
Right. But, for instance, if you're in New York, you'd have to pay taxes on it. But on the federal, they have this blessing, and you're blessed.
Sure. Okay, just real quick, though, because the instructions hit a dead end. It says it's attached Schedule D if required. If not required, check here. So there's a box to check. So would that mean I check the box?
No, the Schedule D is required for you. You got to do the Schedule D if you want to get the tax benefit. You got to do the computation on the D. That would be for all your income. So you want to make sure that you're doing. Aren't you using software, Joe?
Well, right now I'm doing it on paper.
No, Joe, use software because the computations are so convoluted, you're going to end up screwing it up. So go and buy some software. Or go online and get some software. Pay some. You don't want to screw it up, Joe.
Well, I understand. I'm saying, well, how about the free stuff? Does that do it?
I don't think it'll do it on a Schedule D, no. But, Joe, look it. if you pay $75 for somebody to help you or buy the software, if you mess it up, you're going to be bouncing back and forth with your refund. They're going to hold up your refund. They could audit your return. Just pay for the software, Joe. It's worth
I
it.
can do that. But honestly, I'm just confused.
Well, and I can't teach you a tax class over the telephone. So
I understand.
okay, so if you want to email me, I could spend more time lingering over this, but right now I got to say bye-bye.
Okay,
Bye-bye.
thank you.
Thank you. I mean, I love Joe, but I can't teach him taxes.
Yeah,
over the
I also wanted to say before we leave this topic about married people and the penalty, I've also been doing a lot of people married separate, and it helps a little bit with the answer because of the state. So I did somebody today, and it was about $1,000 more, and so it's
sometimes.
an option. Yeah,
Right,
sometimes. Yeah.
I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We got Carmen in Niagara Falls. Hi, Carmen.
Hi. I got a question about my New York State tax for 2018. I never received it.
Okay.
I called my tax guy,
Yep.
and he told me they had sent me a letter about more employment that I had for the year, which I didn't. So
Okay.
I never received it. So since then, I called. It's all automated. I can't talk to a human being. And they told me they're going to send me the paperwork, whatever, the automated thing, and within 2 weeks. I've called 4 times now, and 4 times I've never received the paperwork. So
What I would
got
do
money
is,
coming, I
Carmen,
can't get it.
I'd call your assemblyman from New York State in your district and tell them your problem. I bet you they'll solve it in a darn big hurry.
Someone else said that to me, too. I wasn't sure.
I would call my assemblyman. That's what they're there for.
Okay, thank you.
What is it that is the holdup?
They haven't sent him. He's responded. He didn't have another job, and they said that they sent him that they are going to send him some paperwork, but he
Right.
never got the paperwork.
Yeah.
And they said they're going to send it again and again, and he keeps calling and nobody talks.
I
to
mean,
him.
if it wasn't tax
4 times.
season, I would do a conference call with you and call the New York State practitioner line. It just makes it real, and I get through in like 7 or 8 minutes. It just makes it more difficult because if it's tax season, but I can call and do a conference call with you. So that's something on the table as well, Carmen.
Yeah, if you want to call, but I'm going to tell you, no, she doesn't have time. You don't have time right now.
Right.
But if you want to wait till after tax season, if you're not successful, then call us after tax season. Tiff will do a 3-way and get you
There's
through
a
the practitioner hotline.
Oh, thank you so much.
All right. Thanks, Carmen.
Yeah.
All right. Bye-bye.
Somebody texted in, just pay Esther to do it. You'll get it right the first time, and you'll get more back. Definitely worth it.
That's great. Thank you very much. That's a lovely comment. Did somebody text that in? My mother must have. I'm Esther Golias, the
Like
tax lady
that.
from EG Tax, 8030930, 8030930, star 930 on our cell phone. We got calls coming in. We're going to take a short break, and we'll be back with you and Fred and your calls after the break. I got all my sisters with me. Hey, I'm Esther Golias, the tax lady. To us, your family, and for those of you that know us personally, you know that we treat you like family. We love you, and we love serving Western New York and Arizona and the people in Florida because that's where we're at. I'm in studio with Tiffany Fabian. I'm Esther Golias, the tax lady. 8030930, 8030930, star 930 on the cell phone. And Fred has been waiting so long. Hey, Fred. How can we help you, sir?
Hi, Esther. I'm the trustee of my sister's supplemental needs fund, and hopefully I'm right on the assumption that if she doesn't make $300, I don't have to file taxes.
That's
right?
correct.
Okay. Well, she made more than that in 2019.
Okay.
What form am I going to use?
Supplemental. So she made,
No, he's got a trust,
okay.
a 1041.
1041.
1041.
Yep.
And am I going to have to pay taxes because nothing was taken out?
There's an exclusion of 300. So if it's
might be on the
$10
New
over,
York-
it might be
on the New York.
$2.
Oh, okay. All right.
Okay.
So this is like a 1048.
A 1041.
Well, it's a 1041. It's a
Yeah.
fiduciary.
Right.
Okay.
So okay. Thank you.
All right. Thanks, Fred. Fine. You waited all that time.
But that
And
was
we're
a
gonna
good
go
question.
Huh?
That was
Yeah.
a good question.
Right.
Form.
And obviously trusts pay at a much higher rate. So the bottom level will be 10%. So that's why if it's over by $10, it'll be $1.
Right.
All right. And we're going to go to Marie. Hey, Marie, how can we help you?
Hi, I have a couple questions about qualified charitable distributions from an IRA.
Sure.
I had my investment company send my church a check, and I haven't been able to get an acknowledgement letter from my church. I even typed one up that I found on the internet and mailed it to them. So how important is it that I have that letter?
It
Well,
should
if
be
you get
coded.
audited, it'll be very important.
But it should be coded on the 1099 as a distribution to a qualified charitable trust in box 7. So on your
Yeah, what
1099R.
what code does your 1099R have?
I'm sorry, I don't know what you said.
What code in box 7 does your 1099R say?
Oh, I don't know. I have a letter from the company. Okay, box 7.
Of the 1099R.
1099. I'm looking it up right now, too.
1099R is from Social Security, right?
No, hon, that's an SSA
From
form.
the
Okay, well, I
the
have my thing from
distributing.
Fidelity
the
here,
IRA.
and box 7 has number 7 on it.
Okay, well, so that's the wrong code. So that's why you want to make sure that you get that corroborating letter. I will tell you, I did a distribution just like you to my church. And when I got my 1099R, it was a box set. It said box 7 too. So, but I do have the letter from my church.
And did it go right from your...
Now, do you go to this church, Marie?
I do.
What
do,
the
and
heck?
I had
Go
it
to
mailed right
go to
to
the
them.
pastor tomorrow and say, "Look it, pastor, no more distributions to you unless you give me that letter."
And did it go right from your IRA to the church?
Yes.
Yeah.
Yes, I decided that it was the safest thing to do.
Well, it's the best thing too. It saves you lots of money. So you really got to stop after service and say, "Pastor, I really need this letter."
So don't forget...
And maybe he doesn't understand. You know, the thing with churches is they have a volunteer staff many times, especially if it's a small church, and maybe the secretary doesn't know what the heck you're talking about.
Yeah,
So
I was really specific. I said it doesn't count as a charitable distribution, charitable deduction, and still nothing. Okay, so I will talk to them, but I have another question.
Yeah.
It said that it had to come out of the required minimum distribution. Does that mean I can't take more than the required minimum
No.
distribution in a year?
You can do the distribution from your IRA if you're over the age of 70 and a half to the charity, qualified charity, up to $100,000.
Okay.
But you can take more money out of your IRA.
Yeah, up to $100,000.
Yep.
Okay.
Okay?
All righty. Thank you very much.
All right. Thanks a lot, Marie. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Okay, we want to talk about credits.
Yep.
Now, what's the difference between a credit and a deduction, Tiff?
So an adjustment to income goes to
A deduction.
A deduction is something that reduces, I don't
Your
know.
taxable
Yeah,
income.
Your taxable income,
Right.
yes.
So if you are in the 10% tax bracket and you have a $10,000 deduction, you save $1,000 in taxes.
Correct.
That's how a deduction works. But a credit is 100% of what the credit is you get back.
Right.
And really, the tax returns that are being done now are less. There are some deductions, obviously, but the credits are which are saving people so much money
'Cause it
and are
reduces-
so
It
important.
reduces your tax liability.
Dollar for dollar.
Dollar for dollar.
Okay,
Yep.
so the first credit I wanted to talk about is an adoption credit.
Yep.
For those of you that are thinking about adopting or have recently adopted and you didn't know that there was a credit, there's a credit for adopting a child, even if you didn't pay for the adoption because it was a special needs child, like in a special sibling group, of $14,080.
Right.
That means you don't pay $14,080 in taxes. It is a credit.
Yep, that's the adoption credit. And one of my clients in Florida, she just adopted a child. So I asked her how much it was that she spent, and she got this adoption credit Now, she only spent $3,000, so she didn't get the $14,080. The $14,080 is only if it's a special needs child, which is the maximum credit.
Right.
But she
right.
did get $3,000, which is a credit which ate up her liability, which was a wonderful thing. And she also got the child tax credit, and it was her first child ever, so it was really exciting.
All right, so that's the first kind of credit. So this, and then the next one would be child and dependent care credit. Now, a lot of people know that if you take your kid to daycare because you work, then you get a credit on your tax return of 20% for the first. If it's one child, $3,000. If it's two kids, it's $6,000.
Right.
Okay. So it's a credit, 20% credit of what you give to them. Now this is for a child or a dependent. So the dependent it has to be somebody, if it's over a child over the age of 13, has to be disabled. So you could have a disabled brother,
Right.
who in order for you to go to work, you have to send them to daycare. Then you would get a child and dependent care credit. Let's say daddy works and mama is going to college. So she doesn't have wages, but they assess to her what would be a wage alternative in order for her to qualify. So both of them don't have to be working. If mama is in college, daddy's working, and the kid should go to daycare, that would qualify. And if you have a disabled child, forever.
Right. That's right. Yep. You get to take the credit regardless.
So
no matter what
a lot
age,
of
if you
people
spend
aren't.
money to
And
care
on
for
the
them.
state of New York, the child care credit is refundable. Now, in the federal, it only reduces your liability.
Yeah.
But on New York State, they give you the money back, even though you didn't pay it in.
So there's a text question. It says, if I adopt a yellow lab, can I get a tax credit, Chris?
No, it's got to be a person.
Darn.
Got to be a person. Got to be able to qualify. But that's a good question, right? I would love to adopt a yellow lab.
Oh my! When I see a dog, it just brightens my heart.
Right. Okay. Then the next kind of credit, and a lot of parents, this is really a moneymaker. It's the child tax credit, and it's available for your child up to age 17. Now, a lot of people go nuts over that, and they say, well, at 17, that's when they really cost money. It's true. But it's from birth to age 17, you get $2,000 per child as a credit.
Yep. And the exciting thing is with the tax reform, this was one really nice change with the tax reform, is the child tax credit went up to $2,000 a child.
$5,000.
And then the income phase out is really
High.
much greater. It's much higher. So I had so many married couples who were losing, or their credit was being phased out under the old law. So this has really been a windfall for people with kids under the age of 17.
Right. Now, then when a kid is 17, it's not like you don't get anything for them. You would get the
Education credit.
No. They get
They get the
$500 for
$500
credit for other dependents.
Other dependents.
So if you have a child that turns 17, in the year they turn 17, they lose the $2,000 credit, but they get the credit for other dependents. That would be like for your kid over the age of 17 or older, or grandma or grandpa living in your house that are dependent upon you if they don't have enough taxable income, or maybe some other relative that's living in your home, they would get a $500 credit.
Right.
And again, these are dollar for dollar in your pocket write-offs.
Yep, which is really,
Well, not a
really
write-off.
good.
Credits goes in your pocket. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and you can text us at 3930.
Are you a cat,
Cat person, Tiffany.
I have a dog and a cat, so I like both.
But you don't like Smudgy.
I do. It's Chris who doesn't like Smudgy.
Oh, I thought you didn't like Smudgy.
No, Smudgy loves me and doesn't care for
Chris.
Yes.
Okay. Anyway, so again, 8030930, 8030930, star 930 on cell phone, text us at 3930. All right, the next kind of credit, this one is now, obviously, if you have children, sometimes I say to my clients, well, your child is 16 this year, next year is 17, you realize your refund goes down $1,500, right? But what happens in the year that they go to college, which is usually 18?
Well, there's the American Opportunity Tax Credit, which is a wonderful credit. It's up to $2,500 on the federal and up to $400 on the state of New York, which is a really great college.
So now
credit.
that's another credit. So if your kid, so in 17,
And part of that
you only
credit-
get $500 for them. But in 18, when they go to college, or if they're 17 and going to college, then and the first 4 years of continuing education, the credit is up to $2,500. So it used to be $2,000, then it goes down to $5,000, then it goes up to $2,000, and on the state it's up to $400.
Yep, and part of that credit is a refundable credit. So even if you don't have liability,
You get the
still
money
get
back.
money in your hand, which is really nice.
And what people don't understand is just because it's in the kid's name doesn't mean it goes to the kid. It actually goes to the parent.
Right.
So I had a little girl that came in last night.
Oh,
and
I got a story for
She
you.
was so nasty. But anyway, she sat at my desk and said, "I said, you're in college," and her mom and dad were there, and I like to sit mom and dad down and the kid down, and I say, "Look at here, kid. Here's all you could get is $1,000, and not legally actually, but mom and dad are going to get $3,000. Wouldn't you like to?" As a family, get $3,000. Maybe they'll give you $1,000. She said, "All I want is all that I can get. That's all I want." So for those of you that have teenagers, you understand what I'm talking about. Anyway, I'm going to take a short break for the news. I'm Esther Golias, the tax lady. 8030930, 8030930, star 930 on a cell phone. We got calls coming in. We'll talk to you on the other side.
Sorry, I didn't.
I got all my sisters with me. Hey, I'm Esther Golias, the tax lady from EG Tax. To us, your family, if you need the best tax help for the most reasonable price, we hope you give EG Tax a try, because we certainly care about you.
Yeah, I was going to tell you a story. Yesterday, I was doing one of my clients that I've done his return for years, and his daughter's in college, and I said, "Can I have the 1098T? It's her third year." And so she was at work. He didn't have it. And so he proceeded, which a lot of clients do now. He's texting his daughter, and she texted back, "Dad, I can't talk right now. I'm at work, but I can tell you I filed my own return and I took the college credit." And so his face was like, "Ah." And so she's like, "I'm done with work in 10 minutes. So then in 10 minutes, she called me. I explained the difference. So now I've got to amend his return.
Her
and we've gotta
return.
amend her return.
And because what will
so it
happen, see,
unraveled
in this
from there.
situation is she took the college credit. It got her was $1,000, because that's all, because they don't have enough money.
Right,
It doesn't,
she hardly made
they don't make enough. It's not going to make any difference. So she's going to pay back the $1,000. The dad's going to get $3,000. You know, so there's all of this gymnastics because these kids don't know what they're doing.
Right. And he was very stressful. I mean,
Okay.
Yeah.
Let us go back to the phones. 8030930, 8030930, star 930 on a cell phone. And Chris texted in that he said if it's between Smudgy and Mia, he takes Mia every time. Okay, let's go to the phones. We got Chris. Hey, Chris. How are you, sir?
Oh, pretty good. And yourself?
Oh, it's a lady, Chris. Hi, lady, Chris.
No, I have a quick question for you.
Yes.
We just did our taxes, and my husband and I got married in September of 2019.
Right.
So when we did our taxes, the gentleman, the CPA said, because we're still doing our health insurance with our current employers, because it's just cost effective to do it that way.
To do it what way?
To keep it just
Yours with his and his with his?
Okay. You mean to file separately?
No, I meant like our health insurance. This is kind of where we're leading up to. So I asked the tax guy, I said, well, we're married now, so, help us do our taxes, and he said, well, technically you guys can still file single because you're not in either one's plan.
That's absolutely wrong. That's no CPA.
Okay.
No, that's absolutely totally wrong.
Yeah.
Once you're married, if you're married at the stroke of midnight on 12/31, you're married for the whole year. And your filing status choices are married joint or married separately if you live together in the last 6 months of the year. So, and you did, so you aren't, and that's it. Now, if you had not lived with each other and there was children in your home, then one of you could have been considered single for tax purposes, but that's not your situation. So you need a new CPA.
Yeah, well, 'cause he's just a new guy that one of the ladies that referred us to. Cause,
Well, I mean, anybody can do it wrong.
Yeah, and I had a hunch, and I go, "Are you sure?"
Yeah,
and he said,
well.
"Yes," and I go, "I don't think this is right."
Well, you need to have a come to Jesus with this guy. So,
So
okay.
let me ask you this: now that he's submitted our taxes,
Well, you should
assume-
amend the return. Now, it's not going. It's wrong. I mean, what can I tell you? You should amend your return and fix it.
And you were talking about health insurance. I don't know how much income you guys make, but maybe it would be more cost effective if you guys use the marketplace. Just a thought. I don't know what you make.
Well, our employers give us a very nice health insurance plan because he asked. He goes, "Well, there are no children. You guys you pretty much are on your own plan, so there's nothing." It just was very weird. And
Okay, but he filed you married filing separate or actually single?
Single.
Yeah, well, you're married filing separate. So, okay, well, we can talk about this all day long. You need to amend your return.
Thank you so
You're
much.
welcome.
And you had
Bye-bye.
a very good hunch.
Yeah, that's a very good hunch.
Very good hunch.
Okay, we got a text up here.
Yep. It says, I was told to put my real estate in a trust for estate planning reasons. What, if any, are the tax consequences for putting my real estate in a trust?
Okay, so here's the thing. If you did a life estate, which is really what people that want to leave their house to their heirs, their children, and to protect against nursing homes so they can do it in advance, then the life estate means that you, the owner, can live in the house for as long as you want. The taxes still come in your name, but upon your death, then your heirs inherit the house and get a stepped-up basis. So when they sell it, they won't have a big capital gain, if any at all.
Right.
So that's it.
Yeah.
So there aren't any tax consequences that would be negative. They would just be the fact that you're protecting your heirs upon your death.
It's so funny. I was doing a tax return this morning, and she's like, yeah, my mom regrettably passed away, and I got this inherited IRA. And in the middle of the return, just like you usually do, I was like, was there any other money that you got from your mom? Well, we sold her house. And she goes, but I don't have to put that on my return. Well, yeah, you do. It goes on a Schedule D.
Right.
And so they're like, oh, we had no idea. She goes, my other brothers also got a portion. Well, you guys have to do it 1/3, 1/3, and 1/3. And so she's going to get me that closing disclosure, closing document.
Yep.
So,
Yep. Okay, let's see. We're going to go back to the phones and talk to Paul. Hey, Paul, how you doing?
Hello, are you in there?
I'm in there. How you in there, Paul?
Well, Ruby and I, my wife, we're Christians, and we prayed
that
we would be led to somebody that can really help us with our taxes, because what we were doing is that we're very, very low income, and we're seniors, over 70 years old.
Okay.
And, and your name kept coming up, and all of a sudden you pop up on the TV and say that you have a $49 special for just a simple 1040. Is that correct?
Yep.
Yeah, see, we came to the right place.
But that promo is ending the end of February.
Right.
So.
We do it through the end of February. So you got to run on out to our office, Paul.
Well, here's the question I have.
Yeah.
By the way, that last person, Chris, said she had a quick question.
Yep.
I didn't think it was so quick.
Well, the thing is, sometimes you get the answer and you kind of linger over the answer because sometimes you don't want to really hear the answer.
No, really. Listen, I have a simple question.
Okay.
We went to one of your offices in the McKinley Mall.
Okay.
And they wouldn't give us the $49 special.
Well, then you absolutely get a refund.
What?
Then you get a refund.
What do you mean I get a refund?
We'll give you the difference between what you were charged and the $49.
Yeah, why don't you call me at the corporate office?
No. We didn't have the service done.
Oh, okay.
Because he said that we usually file jointly.
Okay.
Yeah, and I get Social Security, and I don't know if Social Security money is taxable, but we do file jointly, so he assumed it would be the $49 special. But one of the gentlemen, the gal in there said, you qualify for that because Social Security isn't taxable. But then another guy comes out of the back room and says, no, it's going to be $101. your Social Security is taxable. So
Well, it all
we're a little
depends
confused.
because if you're married filing separately, the first 85% of your Social Security is taxable. But the thing is, look at Paul. Just call Tiff and we'll straighten it out. So our phone number
call who?
here
Call who?
632-7886.
Yep, and I'll get a special waiver for you.
We'll fix it. We'll take care
I'll
of it.
give you a gift
And
certificate.
I appreciate your phone call.
Well, God bless you
All right.
people. See?
All right. Thanks
I
a lot,
told you.
Paul.
632-7886.
Okay, we got what up here?
A text. It says, I understand money into a 529 plan is deductible. What about the tax consequences of a UTMA, UTMA?
Okay.
UTMA is a unified tax.
I don't know what an UTMA is.
I'm gonna look
You mean
up an UTMA.
I don't know, but the tax consequences of an UTMA, I don't know. I
But
have no
true
idea.
of what
Tiff's
about
gonna-
a 529? You can deduct up to $10,000
Right.
a year on New York State for 529. So that's a really nice tool that you can use for kids that are going to go to college, and you can also use it
And the
for
other
K
thing is
through
they
12.
just changed the law on a 529. You can now take the proceeds out of a 529 to pay off college debt, student loan debt, which
So-
is a recent change in the law.
And UTMA is a Uniform Transfer to Minor Act.
Okay, well, that's not tax deductible. So if you're just transferring money from yourself to a minor, then it's a Gift to Minors Act.
Right.
So it's the kids, the money just grows for the kids,
Yeah.
and that's
There's-
it.
There's no subtraction.
And there's
on
no
New York.
there's no adjustment for that.
But
Okay.
that's a really good question.
Okay, I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 3930. And all right, we're talking credits. The earned income credit. Now, this is a gigantic credit.
Yes.
And you can kind of, all right, first of all,
Be the
one
captain.
of the things that people aren't aware of is if you retired on a disability before normal retirement age, and you have a code 3 on your 1099-R, you can use that money to count as wages so that you qualify for the earned income credit if you have children or even if you are a lower income person between the ages of 25 and 65.
Yeah, I do a married couple who qualifies for this every year. That's right.
So if, let's say you were working at General
No
Motors,
kids.
you got hurt, and you're out on a GM pension, and then you have a code 3, then let's say the pension's $15,000, it isn't treated as a pension for earned income credit purposes. It's treated as wages. And if you had kids in the home, you would get a refund of like $7,000 or $8,000.
Right. Which is a really nice tool.
So that's one thing that people aren't aware of very much, if at all.
I did this for somebody who's retired from the state of New York on a disability pension. And so for the last 3 years, she wasn't getting the earned income credit. So I amended her last 3 years return, and she was tickled because, let's face it, if you're disabled, you're usually working on a fixed budget. And so it's really nice. It was a windfall of money for her.
But here's the thing. You have to have earned income, and that's what's so important. If you're retired on a disability, that disability pension is temporarily, because you're under normal retirement age, considered wages, so you can get the earned income credit. The rest of you, if you have children that are living in your home and you have no wages, go get a job, because you are letting thousands and thousands of dollars sit there at the Internal Revenue Service because you aren't working. Like, especially I can think of moms that are getting alimony and child support, and they think it's really good to be home with the kids, and it is.
Right.
But if they just had a part-time job, they would get a lot of money.
Yeah.
And it's refundable on the federal and the state.
Yep. It's sort of like being the captain of your own ship. And so it's just a great, or even self-employment. If you're a mom who stays home with the kids, if you babysit or watch some children, do a daycare in your home, or if you do a
That's
small
right.
cleaning business.
I mean, that's a really great. So you don't have to go out to be working. You can do daycare in your home, or be a cleaning person, right?
I've done that.
You've done what?
I've been a cleaning person.
Where?
I
At
used
your
to
house?
I used to clean your house.
What?
I did. When you lived on Clairnew, I used to clean
When
your
you were
house.
my kid.
Yeah, but you used to pay me a little bit.
Oh,
Or maybe it
okay.
was my allowance.
Let's not go
Was
there.
It my
okay.
allowance?
All right. Anyway, And the other credit I want to talk about is the foreign tax credit. And this is, many of you have foreign tax credits on your statement that you're getting from your brokerage house, and you just let it sit there.
Right.
Because your investments with the brokerage house is paying taxes to maybe France or paying it to Italy, and you're not even aware that that credit will reduce your taxes dollar for dollar, but you have to do the form 1116 in order to get it.
Right.
But let's say that your brokerage statement says $250 foreign taxes. If you don't do the foreign tax credit, you've given away $250.
Right. Right, which is silly. So don't do that. And then don't forget on those dividend brokerage statements, I'm also seeing qualified business credits.
The 199As.
The 199As. So don't forget to do the 199As.
So because the qualified business credit is a 20% pass-through. And again, these are all on your brokerage statements. So if you don't know what your brokerage statement says, you really ought to take a good look at it, because many of those things, every time there's a little figure on that brokerage statement, it means something.
Yep. And then don't forget on the brokerage statements, you can no longer deduct the brokerage fees on the federal, but you can still potentially take it on New York State. Yep.
Right. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 3930. What do we got here, Tiff?
Hey, Esther, we are married, 73 and 66. We have a Roth, traditional SEP IRAs, and a 401k. It seems the Secure Act has changed everything. What is the best strategy to keep our beneficiary from getting killed with taxes when they inherit what is left?
Well, I don't know. It all depends on, this is a very complicated question, because the Secure Act basically said that your beneficiaries, except for your spouse,
right,
has to receive the proceeds of their inheritance within 10 years. So it is true, it's a lot of money as opposed to annuitizing it.
Yeah.
So you really should, what I'd suggest you do is come on in, and we'll tell you the tax consequences of it, because to make sure that you really understand what they are.
Another thing I would do is, if I were them, I would sit down and strategize. They might want to take more out of their IRAs and their SEPs
There are
every year.
A lot of people, like for instance, you're 66 and 73. The standard deduction in your case is $27,000.
Right.
So you might be able to take money out of your own vehicles right now, strategically planning, so there's much less left later.
Yep. And I have another client who is converting his IRAs to Roths. I don't know if it depends on potential paying the taxes now, so your beneficiaries don't have to.
Right, but you really, doing that whole Roth conversion, you have to say, I really want to pay these taxes now. I really want to, because I might die 20 years from now, and who knows what's going to be out there. Maybe by then, Biden or what's his face, the communist, has eliminated taxes, but I want to pay them now. So if you want to do that, you can.
Yeah.
Okay. Whatever. Let me go to the phones. Let me talk to Diane.
Okay.
Hey, Di, how are you?
Hello.
How are you?
I'm fine, thank you. I'm calling a question about a New York State question.
Yeah.
In reference to the Startup New York.
Yeah.
Now, startup businesses New York do not have to pay state taxes for a number of years.
That's correct.
Correct. Now, do the employees of these businesses have the same benefits?
Yes, they do.
They do. Oh, I see. Because I was talking to my grandson, and he was saying he doesn't have state taxes taken out. And I says, oh, how foolish.
And that's not foolish at all. There's a special computation, and if you're working for an employer at Startup New York, you don't pay taxes.
Oh, my God, that is unbelievable.
You pay federal, but not state.
All righty. And
right,
is
thanks,
that
Diane.
for 5 years, or what is it? Or
I don't know.
okay.
I have no idea.
But in other words, he's okay for
He's
not having
absolutely
taxes.
great. Yep.
Okay, thank you very much.
Thanks a lot. Bye-bye.
Well,
okay.
There's a text. It says, hey, how is my Social Security retirement taxed? Starting last year, people were wise, heard it was 50%.
Okay, so if you're married filing a joint return, half of your Social Security added to all your other income, if the answer exceeds 32, then the excess over 32 is half taxable until it gets to 85% taxable. That's it.
So
and if you're single,
yes.
it's $25,000.
Mm-hmm.
That's how it's taxed.
That's
We're going
right.
to go to Joe. Hey, Joe, how can we help you?
Yeah, it's just me, Esther.
Hey, Joe.
I got a question for you.
Yeah.
So will Mike Bloomberg, is he going to pay everybody's taxes?
Probably. I know that when they're passing out the castles, I'm going to be in the castle line.
Yeah. I would take the maybe the shed in the backyard of the castle. Question being, Esther, this is kind of like a friend of mine. We were talking about taxes. He had an issue with a federal tax. They sent him something that said he owed something.
Right.
Is he obligated to call the New York State, or do they communicate back and forth?
No, you see what happens is the technique both the federal and state use is to send you a bill, a proposed change. Then so they lobbied the ball. Here it's now in your court. So you say, "Oh my gosh, they're sending me this bill. I don't owe this," and you send the proof of what they're disallowing or what they're questioning back to them. They then look at it and say, "Oh, we don't like what you said, or we need more clarification." Back to you. Then you have to respond back to them. Sometimes it goes back and forth. If you ignore the correspondence, it gives them carte blanche to change and assess the taxes that they're proposing.
And then there's freedom of information, and so the federal will communicate the
With the
findings to New York State, and then New York State about a year later will send you a notice as well. Does that answer your question?
Yeah, I wasn't quite sure because you were saying, you were talking before that the state income tax program is set up different than the federal, but I didn't know if they communicated.
Oh, they communicate with each other, yes.
Yeah, they all, especially if they know there's a piece of pie involved.
That's right.
Well said.
Hey, Joe, thanks for calling.
Have a good day,
You
man.
too. Bye-bye. I'm Esther Gullius, a tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. So we talked about education. We talked about adoption credit, child and dependent care, child tax, earned income credit, education credit, foreign tax credit, credit for other dependents. We talked about the $500 credit. The residential energy credit is only available now. So people that think that they're getting storm doors and windows that are fuel efficient, that's gone.
Right. It is. It's only for solar.
Right. Solar credit is there. And by the way, it's a substantial credit.
It is. It's really substantial. It's
And here's another one that is really great, the retirement savers credit.
Yep. It really is. It's a great tool. It's good for people who are without kids, with kids. You have to be a lower income. And if you put money into your 401k or your 403b or your qualified pension plan through New York State or the government, you can be entitled to the retirement savers credit.
All right. So basically, if you're putting money into retirement and you're married filing a joint return and your income is under $64,000, you can get a credit of 10% of the first money that you put into your pension plan, 401k, IRA, and it goes. So it's remarkable, but it's 50% if you're married filing a joint return and your income's under 38.5.
Right.
So 50% of what you put away. So you got the credit and you put the money away.
Right. Yeah, and so this is a good tool that I use. Some people are at that cusp of being able to qualify for the retirement savers credit, and so what I do have them do is put money into an IRA, get their income lower, and then they qualify for the 8880, which is the retirement savers credit.
And that's what's so cool. You can do that. Let's go back to the phones. Hey, Mr. Tom, how can we help you?
Yeah, Esther, I won $33,000 on the lottery. They took 24% off.
Okay.
And I'm retired. You think I didn't file yet?
You gotta report it. You gotta report it. Did you lose equal to what you won?
Right. Do you think I owe more money?
I don't know. I don't think you should. You sounds like. Are you married or single?
Oh, married.
Okay, you're both on
retired.
Social Security.
Pardon?
Are you on Social Security and any other form of income?
Pension and Social Security.
How much is your pension?
$12,000 a year.
All right, so you got your 12 half of your Social Security for you and your wife. Let's say is 20. So 12 and 20 is 32. Plus your gambling means you're going to start paying taxes on your Social Security. So it's a crapshoot. I can't say, Tom, but you might end up owing some money.
But you had some withholdings from it too, right?
Right.
You
He said 24%.
24%. Yeah.
But they took. I won 33. I ended up with 22.
Yeah. Well,
right.
it's going to his social. What's going to happen is your gambling's going to cost you some money. So hopefully you got enough to cover it.
Do you have any
don't know.
losses? Because it might help on the state. Do you have losses?
All right. Thank you.
Okay.
All right. Thanks, Tom. I'm Esther Gullius, the tax lady from EG Tax. We're going to run right now, going back to the office to work. If you need the best tax help, EG Tax is open 9 to 9 Monday through Friday, 9 to 5 on Saturday. You can email us through our website at egtax.com. Thank you for listening. I love you. God bless. Bye-bye.